Morning, hi.
Hi. Yes.
Sorry, who's going to be moderating it?
I will be moderating the session.
Hi, Narsina.
Okay.
I actually just sent a brief deck that I was planning to use for my piece. This is Harshit Jain here. So
Yes.
I hope you have received it, because sometimes getting a share screen takes time. So I thought it would be best in case if I could request you to put up my deck.
Okay, I was not actually informed about this.
I've
Dr.
sent it to
Sharma, have you
Shruti.
received Dr. Ragini Jadhav, have you received the deck that Mr. Jain has sent?
I just sent it out. I sent it on the earlier email thread with Shruti and Dr. Murthy, and I think there is somebody else who's also on that email trail.
Okay, okay.
Otherwise, if you want, I can send it to you if you just let me know what your email address is.
Yeah, actually, if you could send it to maybe Dr. Ragini Jadhav, who is just 1 second.
Shruti is talking to them, sir.
Okay, or so.
Yeah, if you can just share the email, then I'll just send it. You can put on the chat and I'll take it from there.
Okay, Mr. Harshit, can you send the deck to Shruti? I think you have an email address, right?
I've already sent it to Shruti. I have sent it to Shruti.
You sent it to Shruti. Okay.
Yeah. So you can just confirm to me that it's there, so that you can bring it up. That'll be easier.
Yeah, I don't have it. Just 1 second.
Sent to Shruti and Mr. Murthy, and you're also there on this, Narsina Savaikar, right?
Yes,
I think you're also there on that.
Shruti has the file, so she'll ensure that it's uploaded.
I think you also copied on that email, so you can also check.
Possibly, I don't.
Okay, no.
Just give a sec, sir. Just give a sec. We're working on that.
Sure.
Thanks. How did the morning session go?
It went well.
Great.
Mr. Vasudevan from the RBI.
Yeah. Austin, you also based in Mumbai?
No, I'm in Chennai.
You're in Chennai, okay.
Chennai, yeah.
Nice. I'm really keen to hear from you.
I think, we all.
Okay, then I think let's start. So welcome to.
I think one more person is supposed to join. Is it? Oh, okay.
Sachin.
Yeah. Can you hear me?
Yeah, we can hear you.
We can all hear you. Yeah, I can hear you. Yeah.
So welcome to our plenary session on fintech and the future of money. This is obviously a very topical issue because I don't think there's ever been a time when the monetary system has been changing as dramatically as it is currently. Obviously, we have a lot of this is being driven by technology, as was addressed in our earlier session by Mr. Vasudevan of the RBI. So in terms of fintech, in terms of artificial intelligence, cloud computing, big data, all these are causing the financial system to improve dramatically and is allowing for newer types of services to be offered to more and more people, services that are faster, that are more customized, and that are more intelligent. But I think what's most interesting currently in terms of sort of the monetary system and the future of money is I think this sort of different philosophies, different sort of ways of thinking that are sort of clashing in the monetary system. On the one hand, you have the approach represented by cryptocurrencies, where they're trying to sort of create a completely decentralized financial system, where without the need for trusted intermediaries, maybe even without the need for regulators, they try to create almost like an alternative financial system. It's a really interesting and in many ways a very radical approach. And on the other hand, you have, of course, governments and regulators and central banks. And of course, their belief is that a financial system does need to be regulated, but they're also on their own, they're also introducing their own innovation. So of course, in India, we've seen that over the last 10 or 15 years, particularly in the payment space with Aadhaar, UPI, and so on, a huge number of innovations that are being sort of promoted by the government. And probably the next evolution of that would be central bank digital currencies, which would be another radical innovation. You can sort of think of that as a competing approach to that represented by cryptocurrencies. So it's really a fascinating space, different approaches, different philosophies clashing. One hopes and one expects that at the end of it, you'll have whichever approach wins out or whichever combination of approaches win out, we'll have a better financial system which can serve the needs of as many people as possible in a more efficient way. So to try to understand all this, we have a very distinguished panel who will try to make sense of all this. So let me introduce our 4 panel members, and then each of them will speak for about 15 minutes. And then we'll have some time for a Q&A after that. So our first panel member is Mr. Harshit Jain. He's the founder and CEO of Sigma Advisory and a consultant of Oracle Financial Services Software. He's an experienced corporate and investment banking and business technology professional with expertise in setting global transaction services and business banking at banks and IT companies. He has also served as a strategic advisor to the banks and has guided them in their digital journeys to help them achieve their go-to-market strategies. Welcome, Mr. Harshit Jain.
Thank you very much.
Mr. Srivatsan Kumar is a Chief Operating Officer, Treasury and Markets, DBS Bank. He's a chartered accountant with over 15 years of experience in banking across various geographies. He's been a core member of various transformation projects for banks like onshore subsidization of DBS banks, merger of LVB digital and data transformation. He's responsible for digitizing treasury offerings to clients and implementing dealing platforms to enhance efficiency and effectiveness of digital offerings. Welcome, Mr. Kumar.
Thank you.
Mr. Austin PM is a serial entrepreneur who's currently the CEO of educentral.in, an online education startup focused on offering affordable employability courses to college students. He has more than 2 decades of managerial experience in banking and financial services, internet-based technologies and education. His financial services experience includes stints at State Bank of India and the Tata Group. He set up carstreet.com, India's first auto website, and also founded India's first personal finance fintech startup, PaisaPower.com. Welcome, Mr. Austin.
Thank you.
And finally, we have Mr. Sushil Zaregaonkar, Director, Digital and Fintech Consulting at EY. He's a seasoned executive with 16 plus years of work experience in technology and consulting in the financial services domain. He's led and delivered complex programs for various financial services clients to set up new digital business units in the area of digital strategy, technology transformation, platform setups, digital lending, broking, and digital marketing. Welcome, Mr. Zaregaonkar.
Thank you very much.
So I think could our first speaker, Mr. Harshit Jain, if you could please start.
Thanks a lot, Narasimha. Good morning to my fellow panelists, and welcome to all the students and attendees at today's panel discussion. So, it's a very interesting field, and when you talk about fintechs, I would like to really go ahead and share with you my perspective on it. When fintechs came in, banks thought that these are competitors for us, so they viewed them as competitors, and fintechs did well to expose those areas that I think the banks had taken for granted. And if I may say so, and with no disrespect to any of the bankers who may be listening to this, I think banks took customers for granted. Banks went by their procedures, and I have a slide that actually I like to show over here, which says how the bank's thinking was at that time. So one really had to question whether banks are in the service industry at all. And slowly, I think the fintech started chipping away from the core business of the banks. And thereafter, I think banks woke up to the reality that fintechs are here to stay, and that they're better off really working with fintechs, not treat them as competitors, but really look at them as co-optitors or collaborators, so that they can actually leapfrog over the more old-fashioned banks who are slow to move. And that was the time that really the collaboration activities between fintechs and banks started. And today, I would say that the recent very bold initiative that RBI took to have Centrum merge along with PMC Bank, and Bharat Pay as a fintech to go ahead and create a new bank. I think it's a step in the right direction to see how banks that may not have worked that well can combine with the technology edge that fintech is bringing it, and the capital that the NBFC is bringing to the table. So I believe that these are the types of things that are really going to evolve going forward, and more so and more rapidly. So in that sense, it's great for the customer, because the customer is now going to see the benefit of this collaboration between the banks and the technology as in the fintech players. So that's my starting point that I want to go and share. Narasimha, would you like me to cover what I had planned to cover in this session, or will you be taking it in when you are raising questions?
Go ahead. I think go ahead with your session. So I think each of you, if you could speak for about 15 minutes or so, that was the plan. So please,
if I can just request you to bring up the deck that I have shared, then I'll just complete what I wanted to cover in this area.
Yeah, sure.
Sir, you want us to share the PPT right now?
Yes, please. If you can do that, then I'll complete what I had planned to share.
Sure, sir. Sure, sir. Just give us a second, sir.
Sure. Thank you. So while the presentation is coming up, the way I approached this topic was that I looked at what are the 4 key challenges, and when I say challenges, along with that, the opportunities that come in for us in the market as practitioners, and also keeping in mind that we have V-School students, the graduating class, that would be really keen to see what is it that our views are as panelists. So I really wanted to look at it from that perspective. So if you can just move to the next slide, please. Yeah, this is what I would just let all of you read, and this is something that I found really hard-hitting. Banks have been in the service industry, or so all of us would think, but then if you just read what is a small example about a customer wanted to go and buy bread, and the bakery says, no, you have to fill this form if you want to buy the bread, and you have to do processes and credit check. And if you qualify for buying bread from me, then I'll go ahead and give bread to you. Now, the customer says, all I want is to really pay you and hurry home with bread, because a meal is awaiting me, my family is waiting for me. But, the approach of the baker or the bakery was, no, you're not really respecting our business practice. You must obey our rules. You customers are all the same, no respect for our schedules. And that's where, the customer really says, oh, there's a sign across the board that says, fresh bread sold your way, right? So I think this whole change of mindset and thinking is what I want to go ahead and share through this anecdote, of course, of a customer going to buy bread. If you can please move to the next slide. This is where I am looking at the 4 key challenges and opportunities in the fintech journey. And I want to approach this whole dimension of what's really happening in terms of fintech and the evolution of money. We're looking at what are the strategies. So one, the traditional way was fintech as a foe, right? I mean, it's an enemy, number one. Second, I think the pressure on the banks was to look at the front end. How was the look and feel, right? Because that's what mattered to the customers, and I would say wrongly so, because customers are smart, and they are not really just going to be swayed away by a nice portal front end. I mean, they're looking at end-to-end and what we in the jargon call straight-through processing, but that benefit may not be there for many customers. Whereas if we look at what the opportunity is and at the end of how this thing is going to pan out for the customers, then it's better off for the banks to really look at fintechs as friends or cooperators. You come together wherever you can provide a solution. You may be competing, at the same time you collaborate, because that is what the customer today is looking at. And next really is the experience across all touch points. It's not just enough for you to go ahead and keep getting calls from a very, very hungry salesperson selling you a credit card. And once the credit card is there, then the phone is switched off. That doesn't really work in today's environment, right? Because everyone is looking at literally 24/7, but a way for the experience at all touch points to be taken care of. And that's something to keep in mind. If you move to the business model of old used to be that, okay, banks are going ahead, just taking the deposits and lending money, and the difference that is there between the interest rates of deposit and lending is the revenues that they're making. So it was very product led, with customer service satisfaction and net promoter score being key. Today, I mean, there's a big shift that is taking place, and that's something that all of us should see when we are talking about the evolution of fintechs into the movement of money, and how the thing is going to pan out. It's moving away from products to platforms. We all have known how Amazon and Flipkart and all of these marketplaces have really been the ones where customers are going to, because they can really go ahead and compare and see what's best for them, not really have to go visit multiple banks to see what are the best offerings. I mean, you have Policy Bazaar, you have Insurance Bazaar that are actually doing this great job of aggregating competing offerings and make it easy for the customer. Then, of course, the experience-led way of offering your business, and the solution approach, not just a product that you're selling, but really what is the solution for the pain areas of the customer. And what's moving away is just satisfaction has no rate today. I mean, it's really about customer delight, it's customer advocacy, and how can we get the customers to refer us to more customers. And the heart of it, I think, is really the product management, because banks have really looked at managing these products, but having been in many banks before and seen this at close quarter, I think I'm really happy to see the fundamental shift taking place from what I call an ivory towers approach, saying we know what the customers want, these are the products we are developing, customers will take it. I mean, that doesn't really work. And that's where the co-creation of value with customers is really the new mantra, and not just from a point of view of a mantra, but really a lot of banks have started practicing it to great results. Last but not the least is really the digital trust and security, because I'm reminded of, in the early 80s, American Express used to go ahead and promote their card saying, don't leave home without it. Now today, if somebody is not leaving home without it, it is really the mobile, not really even your wallet. As long as you have your mobile, you may not have any cash, you can still manage the day, right? And that's really the fundamental shift. But the key thing over here is, how do you trust who is at the other end of this transaction, right? And that's why, like the famous movie, based on the real life story of Frank Abagnale, Catch Me If You Can, you have regulators and banks taking steps to make the security better, and you have fraudsters who are really going ahead and saying catch up, playing a catch up game. So really the fundamental shift needs to be moving away from a tick in the box mentality to how really you go ahead and have a global and a very holistic business mindset when you're seeing who's the person at the other end of the transaction. Because day in and day out, I mean, you read in the newspaper, at least there's one article about how somebody has got phished, or how somebody has gone ahead and given their OTP to a fraudster and so on. So the key thing over here I see is that sometimes banks have really gone into not looking at whether, am I serving everyone? Is the target market that is there for me only the creamy layer, or what is the high net worth individual or the ultra high net worth individual? What about the fortune at the bottom of the pyramid? What about the people who have been underserved traditionally by the banks, where actually the fintechs have found a way of tapping into? So in my belief, I think the underserved segments are the ones that are going to be key. How the fintechs are able to work along with banks to tap into the to the underserved segments, and that is something that the banks really have to go ahead and pay attention to and look. And I have some few examples because I did want to go ahead and also not just pose a problem, but really the way. So that's where all of you would be familiar with the product lifecycle curve. But for me, when I look at the technology adoption, we really need to see that there are people who are going to be comfortable with technology. Like all millennials may not necessarily be comfortable with technology. It's everyone wants to be treated as a market size of one, correct? And that's a reality. So nobody wants to be treated like, oh, you're part of one particular business segment. So that's in my view. And there's a lot of work, good work that has been done by a guy called Jeffrey Moore. I mean, I would encourage students to read about the books that he's written. But he actually was the first one who came out with this thing saying for technology adoption, there are two chasms that come in before the product actually gets ingrained. And when I say product over here, I'm talking about platforms in today's environment. So the jump that is there from early adopters to the early majority is a chasm. And the chasm can be crossed only when the crisis that the customer is facing is more than the perceived risk or pain that is there in the adoption of the new technology. And that is a very key thing, which is the change function. So I think the banks and the fintechs, when they're working together, they need to be aware of the customer, because with technology you can be ahead of the time and find that you're coming a cropper. So it's really important for you to go ahead and come out with those platforms and products and features that the customers are ready for. Can you move to the next, please? I also want to go ahead and share over here, because I mentioned earlier that how can you go ahead and serve the underserved segment? And that's a big challenge, because there are so many kirana stores, for example, or what is called the micro, small and medium enterprises, the lower end of the corporate segment, the business segment. And I've seen every country really pays a lot of lip service to them. I've seen banks pay lip service to them, but now Nbfcs have been among the early ones, who started going after how can we go ahead and serve the MSME segment. And that's where I wanted to go ahead and share with you that there's a great initiative that's been taken by the Global Legal Entity Identifier Foundation in Switzerland called LEI. And LEI is now becoming like a way for everyone to be able to identify who is this entity at the other end of the transaction. Because in the internet world, the digital trust comes when there's a bank standing behind you who can confirm and vouch for the customer who's actually upfront as the beneficiary. So, those of you who are interested, and I've already shared this presentation. So, Mr. Narasimha, please feel free to share it with the students who are interested. There's a Reuters article in August which shows how a copper company in Zimbabwe was able to tap into the world market just because their bank, NMB Bank in Zimbabwe, thought it fit to give an LEI to them. I mean, it's just an example, but today the MSME is looking at the global customers as the marketplace. Our Prime Minister is talking about the Make in India and how do you go ahead and monetize whatever has been developed. Mr. Narasimha talked about UPI, Aadhaar, and we meet up with them and we find that they really want to go ahead and export all of the technology that has been developed to overseas markets, because today technology is so agnostic in terms of how it can be utilized. But the key thing is we have to find the triggers that are there that can help. And what I wanted to share in my talk today was a few things that are there which are in reality happening. I would urge banks to really go ahead and see that they're able to make use of these type of initiatives moving forward. Next slide, please. This is just something which I thought may be of help for the graduating MBAs. I just put together based on the 35 years odd of experience that I've had being in IT and banks globally, that just so that particularly the students are able to understand what are the ways in which they have to think differently when they go in the market. One, I think with the COVID, the human interactions, face-to-face interactions have been less, but I thought I should put this together. So critical thinking, knowing how things work, why things work, and not hesitating to learn from anyone in the chain. I mean, even the junior people, you can learn from them, because sometimes, with higher education, we feel that, below our dignity to ask doubts. No, please. Creativity and originality, thinking outside the box, but verifying whether are you in line or are you being ahead of the time. Resilience and collaborative approach, right? All of us tend to be very competitive, but I think, as I said earlier, cooperation or collaboration is a better strategy than just being very combative. Emotional intelligence, I'm sure everyone is aware, is taking over a lot of what used to be IQ earlier. The analytical thinking, of course, go on the basis of data, but do not fall into the paralysis by analysis trap, because it's very easy for us to keep getting so much of data. And today there's so much of information overload that we may be getting bogged down in data and be slow in decision making. And that's just not going to work. One of the things that I really liked, and this I was reading, that Google has it as its practice, is the intellectual humility, the ability to step back, embrace the better ideas of others. Because in the room, not the most senior person may have the best ideas. And I think that realization is something that I would urge the graduating class today, maybe in the audience, to really pick up as something to keep in mind, because not necessarily that you alone would know everything and have the answers for everything. As I told earlier, I think moving away from just being product centric to going ahead and looking at the solution. How can I find out what are the main problem areas and then solve these problems completely and permanently? No band-aid solutions just because it's an urgent problem, let's fix it. No, let's fix it for good. Focusing on the customer and really how do you go ahead and make them advocates. And right promise and over deliver, because you do want to go ahead and keep your promises, but promise with care, because you don't want to really go ahead and let down your customers. Next slide, please. So that's just my closing slide in terms of welcoming all of us to the next generation, the next economy. I found some of these quotes extremely valuable in terms of when I advise companies. Responsibility is the great developer, for instance, or each function in business seen as a customer of the next in the chain. When we talk about value chain, supply chain, I think the thinking of everyone has to change, not just, oh, this is not my job, this is somebody else's job. Next slide, please. This is just very, very briefly to share with you that in the last 6 months since I started Sigma Advisory, I've had the pleasure of working with a lot of organizations as a strategic advisor, and also part of the startup venture and with the academic institutions. Next slide, and thanks a lot. Back to you, Mr. Narasimha. I'm happy to take any questions or thoughts, or I can keep it when the session is over.
Yeah, I think we can. I mean, if there are any questions, we could, or we can. I think we can have all the 4 speakers speak, and then at the end we'll have a question and answer session. So thanks, Mr. Jain. That was really informative. I think you really spelled out sort of, in a sense, the new paradigm for using fintech and things like co-opetition and things like a customer-centric approach and so on, and then link that to the skills that MBA students need to develop in order to sort of take part in that new paradigm. So it was really very interesting. Mr. Kumar, could you go next, please?
Yes. Yeah. Hi. Thanks, Nasiman. Thanks all my co-panelists, and welcoming all of the participants to this conference, and a very interesting one. And the conference is extremely topical in nature in the way that we are looking at these things. And I'm kind of bring you the banker's perspective as to how a bank think about fintech. So let me first share my screen. Let me. I hope you're all able to see my screen.
Yes.
Yeah. Okay. So just to begin with, I mean, how do I and what do I think about a fintech or a fintech technology, right? It is basically, the way I look at it, any technology or any innovation which makes the financial services cheaper or more efficient. Actually, to even borrow a very, a movie from Three Idiots where he says a machine is anything that reduces human effort. The same way, a fintech is anything which enables or reduces the issues or challenges with accessing the financial services. That is key, and any innovations around that is just fintech. Now, if you go and look at the section here, right, there are a lot of participants, and there are significant number of participants, but the financial institutions will continue to be in the heart of all these things. Now, why is that so? Why do I believe that will not, at least in near term or medium term, will not undergo a change? Is to take an example of what a bank does, right? Let's take an example. Banks' key and the important role of a bank is a financial intermediation. They borrow money, which is in form of a deposits or in form of a loan or in term of capital market instruments, and then they lend this money to MSME or to the corporates to project finance, working capital, or invest in long-term funds, or do payment payment services, or they end up doing cross-border transfers. So that is really the key and important role of financial intermediation that they do. Hence, they within the whole economic system produce the liquidity and credit, which cannot be done independent of a financial institution. The financial institution could be a bank, could be an insurance company, could be an NBFC, but the product at the end of the day has to rely on the financial institution to create that kind of credit or liquidity to the market providers. Now, this intermediation is required simply because no one else has the skills to correct the timing mismatches, credit and quality controls, which have to be done through a financial institution. And when they do, that role of financial intermediation, when it is performed effectively, then you see the economy and the growth of credit and everything happening. Where does fintech play a role? Fintechs enables the smoothnings of the financial intermediation. So many times in the past, as I think it has been brought very well by my earlier panelists, that the financial services in a way has been not being very efficient. Whether we need to transfer funds, whether we need to do cross border, there has been significant amount of documentation and significant amount of effort that needs to be involved from a consumer side. And that's where fintech plays a very critical role. They provide a space, or they provide it in a very efficient manner to ensure that these services, whether you make a payment or whether you access credits, they make it more easier, so that you as a consumer, we are able to access them very easily. Otherwise the service quality becomes poor, but the services itself needs to exist in the first place. The last and perhaps the most important point with respect to the regulatory oversight, many of these documentation, many of these oversight which is required is more driven by the regulation. And why is that driven by regulation? Is because any payment or any financial transaction has always risk associated with money laundering, terrorist financing, or any illegal transaction. So therefore these checks and balances are put into the place into the system to identify that. Would that be always foolproof? The answer is of course no. There are challenges around it, but the whole concept is that there should not be a large scale fraud to have that concept. And therefore a regulatory oversight in all these financial transactions becomes very critical. It is also important to understand that these regulatory oversight also is critical for the solvency of the financial system itself. Each of the banks are or financial institutions are prescribed certain ratios, certain solvency ratios, capital ratios, and that is to ensure that the financial system of the whole system works perfectly. We all know, for example, when in 2008, when a large financial crisis came, it took the whole world years to recover, and we continue to reel from some of those implications of those. So therefore a fintech, when start expanding in services and becomes indistinguishable from a financial institution, then they themselves become a financial institution, and then they need a governance framework, and they will be governed by regulations. So for example, that's why RBI created payment banks, where let's say a telecommunication company can actually work as a payment bank, and then they start getting regulated under be regulated under that. A small financial bank. So RBI as a transformation also prescribes certain different categories of licenses, and these licenses are then can be adopted by the fintech, and then they no longer remain just fintech, but then they go and go a step above with financial institutions. So that's my first takeaway, and I believe and that is unlikely to change in near future, where the fintech technology will continue to support the financial institution, and financial institution themselves will also have to continue to evolve to produce and support that services. Now, the second component, of course, in fintech itself, if you look at this, is all about various types of services, and they are clearly integrated into every single services that we do. Whether we look at mobile, whether you take web banking, whether you look blockchain, every aspect of it is is now completely technology integrated, and banks no longer see themselves as purely banks, but they are transforming themselves into tech companies. In fact, now banks have some of the largest tech budgets, and many of the large software companies are actually have banks as the largest customers, because the amount of technology spent and amount of investment that needs to be done is quite significant. And therefore banks are no longer just financial providers, but they are financial providers and technology companies. And that is very critical, because without having a good technology services or technology background, it is impossible to deliver the quality of the services to the customer. Let me go to the second component of it. So what are from a bank, what are the various stakeholders, and what are the value that I create, and what essentially the risks that I perceive? And as you say, the stakeholders, we have stakeholders raising from consumer to businesses to central bank to the government, and even that my own employees and shareholders, they are all important and key stakeholders. And it is important that these stakeholders have value seen to them. And how do I see these value, right? From a bank perspective, and when I invest in fintech, I can end up seeing significant reduction in the cost of me delivering that services. So many currently, whether I have to assess whether I have to put resources to look at how do I do a transaction, let's say an FX transaction, having a putting on a dealer to go and quote FX is a lot more expensive, and I can replace that with either a platform or an AI or a machine learning to do the quoting, which significantly reduces my cost. And because it reduces this cost, it of course increases my revenue, and thereby also reduces the time. And the same is a value that a consumer or a businesses can get, which means that they don't have to look at a particular time slot. They can do the transaction at any point of time during the day. In fact, now it's 24 hours, they can actually execute transaction anytime the day. I have the platform ready for them, so which makes it easier for them to see the value. They don't have to wait for them to risk manage that after a point of time where if the markets have moved significantly, they might be at loss. Whereas now with the platform availability, their ability to execute transactions are much better. Mobile banking, and this is very important. There has been for so many years, central bank and government have actually put in a lots of work and effort to see how we can expand banking to the rural space. It is not that it's not that banks do not want to do it, but the cost of actually putting up a rural branches and then the services and revenue out of that is quite limited. Now with mobile banking and the way you can do this banking has reduced the cost with Aadhaar and eKYC. The cost of actually servicing these customers have significantly reduced, which means I can have a large scale and lower profitability per customers, but the scale of the business can justify me having a much larger coverage, which goes beyond just value creation from a banking perspective, but it is also a social the social benefit, where now many of these unbanked customers can come into a banking sphere, and which implies that their ability to access a formal funding is quite significant, and the cost which they currently play are significant. So these could transform not only business for us, but it could be a transformation for the whole society. Compliance has now catapulted it to something which is enormous. Now everything around compliance has been quite significant and large and very complicated. This fintech and this technology enables us to detect frauds, errors, and on real-time basis, which means the red flags can be upfronts, and any payments which have red flags can be put up, and then those things can be immediately resolved. However, to all this, there are significant risks now with cyber threats. Because of fintech, we are exposing the systems to significant cyber attacks, irrespective of firewalls that are built to ensure that these are not there, but they may still not be sufficient. There is a continuous attacks from the hackers. There are continuous data losses, which is a risk which every bank is providing, but which are trying to address, but they exist. Data misuse. Now, I think as we see, we give a lot more data, and there's a significant amount of data that everybody has, and there has to be a framework which needs to be evolved to have a responsible data usage. Otherwise, the data can be easily misused, and this data can actually used to be targeted not to provide a proper coverage. You could deny people insurance coverages. You could deny people loans by using or misusing the data. So there is a lot of issues with respect to how fintech, which actually consumes significant amount of data, can be misused through an AI and machine learning. Lag in regulations. We have to think the space in fintech, whether it's cryptocurrencies or central bank digital currency, the space is moving so significantly that we are seeing the regulations are lagging behind. And here this is a little bit of a tricky position, because the RBI or any regulator can put in a lot of regulation which can stifle innovation, but not having regulations can mean that consumer can be taken a right for. But as such, the whole world per se is, from a regulator perspective, they are lagging a little bit behind on the regulations, because the technology is fast outpacing the regulator's ability to regulate. And that is a significant risk, because that can expose financial systems to a lot of risk, because those technology can overrun the system itself. Up to now, in the last two, I have talked a lot of things in abstract, but I just want to maybe take through a use case to just show how earlier a cross-border FX conversion used to be such a complex process, vis-a-vis how in the world of fintech it has enabled us to be much better. And I used to belong to a lot of my businesses on treasury, and I have seen that transformation that just happened in the last 7 or 8 years in the way we even do cross-border FX. And a few years back, you would always see that you will have to go to a branch. We call it A2 remittances, which are basically current account remittances, which you have to do. You go to the bank, submit your document. You have no option. Whatever the bank gives you, it's just a board rate, and you just transfer. And it takes significant time to transfer. You don't know when it has been transferred. There is no communication, and then it may take a week or 10 days, and that's how it used to be. Now with fintech, and if you would see that this is just a digital platform, and this need not just be a bank. The background or the backend infrastructure of that is a bank, but on the front end it's just a digital platform where you could just submit the document digitally. You can have multiple FX rate options, and that FX rate need not be only restricted to your own bank. It could be any bank, and you could have live FX rates, and these could immediately, the funds could be immediately transferred on an immediate basis. You could have a tracking mechanism, and the best part, all you can do it anytime sitting at your home. All this has been done and enabled through through a digital platform and through a fintech. And many of these are perhaps in-house, and some are basically outside collaboration with various entities, which has enabled the banks to do this. So that's my end of my presentation. So the key point I always want for all of you to take through is that fintech as a critical enabler and financial institution at the heart of the service to be enabled and enable these services. Thank you.
Thanks, Mr. Kumar. That was a really interesting presentation, and thanks for sort of walking us through the different aspects of value creation and also some of the risks involved. And I think putting stress on the need to create value in terms of more efficient transactions, cheaper financial services, and so on, which is obviously extremely important, especially in an economy like India. So, Mr. Austin PM, could you go next, please?
Sure. Thank you. Good morning, everyone. Greetings to my fellow panelists. Okay, so I'm going to put some kind of a structure to the fintech area. So we will talk about bank tech, we'll talk about health tech, we'll talk about InsurTech and regulatory technologies, or RegTech. So let me just share the presentation. Okay, hope you can see this.
Yes.
Okay. Give me a second here. Okay, so this is what we're going to do, right? We'll talk about what is fintech. I think that's been covered. The application of emerging technologies like cloud computing, big data, blockchain technology, IoT devices, and we'll also talk about the metaverse, in a second, right? That's where the technology is going. So, what is fintech? Fintech refers to the application of all these emerging technologies. How these technologies are transforming the banking and financial services industry, including that's the definition of that, right? So we need to understand technological foundations for fintech, like how my fellow panelists talked about how banks are becoming technology companies. But I think there's a lot of due apologies to bankers. I think that the banks are still not getting that technology, and they're quite behind the curve in terms of technology. So I have a slightly pessimistic view on the future of banks and other financial institutions. We'll talk about that, in a minute. So we're talking about four major categories. So bank tech is the application of technology to the existing traditional conventional banks. Wealth tech refers to the technology application in the investment area. It's also called invest tech. We talk about robot advisory services, things like crowdsourcing and cryptocurrencies, and all what are the challenges with crypto. Then InsurTech is very interesting because InsurTech sort of lies between the phygital approach to InsurTech, because we have insurance of assets which are physical real world assets. So how do we tokenize those assets and then insure them, etc. So we'll talk about InsurTech, and then RegTech is the most challenging part, I think, right? Which the regulators are well behind the curve, not just in India. I think globally, a lot of talk going on about decentralized finance, how that is going to replace. So I have a feeling that once you understand what blockchain technology is and then how that is powering the decentralized finance applications, so we have an equivalent decentralized version of each of the traditional financial services offered by conventional entities like banks, insurance companies, mutual funds, etc. So this is so the question is whether we really need regulations, and then do we need a soft touch kind of regulation where we don't stifle innovation, but allow innovations to flourish? So those are questions which regulators are grappling, but I think right now they are fighting a losing battle there. And just to add confusion to this existing mix, we have TechFin, the entry of a large technology company. Amazon, e-commerce company, Amazon, Google, Apple, all of them have financial services ambitions, and they're doing pretty well on that front if you go by the payment example. But then under the hood, a lot of other things are happening in TechFin. They're going to challenge, the banking system. So then, of course, we'll spend some time on Indian, I'm going to go through this very quickly. Please note down your questions or put them on chat, then we'll answer later. So why did the financial services is getting disrupted by technology? I think my banker friend told you that there are customer service is really absent in banking right now. But more importantly, I think we have left out about 1/3 of the world's population out of financial services. Like large part of Africa, large part of India, developing countries don't even have banking access. So I think that's the most important thing, that 2.7 billion people are left out. So if I'm a migrant worker from North India and I'm working in Bangalore, and then I want to send $500 to my mom at the end of the week, I just can't do it, because if I walk into a bank, the bank will ask for my entire Janam Patri, and then it'll take several days for this verification, that verification, and then I'll not be able to send this money. If I'm able to send this money, then take out a big commission and things, right? So the high transaction costs. If a lot of people say that they're not opening a banking account only because the transaction costs are so high, and settlement delays. For example, if you walk into Starbucks or Coffee Day and then pay for your coffee with your credit card, the guy is just across your table, but then the money has to do 6 jumps to get into the bank account of the seller. What I don't really understand is that if I send an email to you, you get it immediately, almost within seconds. Why does money take so long to settle? 3 days, 4 days, 5 days, especially in cross-border transactions. It's funny, because it's not like the banker is actually taking a flight and delivering the cash himself, right? So you have this dilapidated old system, SWIFT, which was created when I was a schoolboy. And of course, there's been some changes now recently, but nothing major is happening really there. So, but fortunately, all of them have mobile phones, smartphones are there. So all these 2.7 billion people have phones through which, for example, a good example in Africa was done by a telecom company like Vodafone. In Nigeria, for example, you could just send money through SMS, and that was a huge success, right? So we already heard about that, and we talked about microfinance. The point is, banks have done a very bad job. Okay, so what are the major technologies? We're not going to go into the details of all these technologies, but understand that blockchain is actually emerging as a platform that combines all these things: machine learning, AI. For example, we can write a smart contract which incorporates machine learning, AI, and automates a lot of transactions, and everything will happen on the cloud. And IoT devices like phones, and especially in insurance, for example. I'm wearing this ring, for example. And if you've seen this, this is called the Aura ring. Now, it can record my heart rate variability, and how much did I sleep last night. All this data can be collected, and then we can put it through a machine learning algorithm, and then predict an insurance event. So all these things are now possible, and blockchain also. I want to spend at least a minute on blockchain technology. We're not going to go into the details, but understand that blockchains are replacing the trust that is provided by all these intermediaries. Right? So we couldn't do business without intermediaries earlier, because we needed some trusted entity in between. Now, the only problem with that is that, for example, if I'm exporting to, say, China, and then the Chinese buyer, I don't trust him. He doesn't trust me. So I asked him to open a letter of credit, LC, with this bank, but then my bank doesn't know his bank. So my bank will go through a correspondent bank, and there's a payment bank, there's a settlement bank. Okay. So it's funny that everybody slaps their own fees on the whole thing, and then delay the whole process, and then it is detrimental to both the customer, buyer, and the seller. And the only guys who are making a lot of money is actually the intermediaries, right? Now, blockchain is going to change all that. It is ushering in decentralized finance. So we will talk about decentralized finance in a minute. But for starters, I just imagine a world where there are no bank holidays, there are no banking hours, there is no bank strikes, there is no minimum balance to be maintained, there is no huge commission, there is actually good customer service, right? Now, that is what decentralized finance is, promising, right? It is the very early stages right now. There are technology hassles and user interface issues, etc. But then, when I started my fintech company, in 2000, and we didn't even have internet penetration. It was too early, right? So we are in the similar stage in the blockchain technologies right now, but these are going to change very, very drastically. Okay, so now what's the trends in fintech, right? So I think the earlier panelists actually talked about how tech investments are increasing in incumbents. But unfortunately, see, I worked in a bank, and I also consulted with some of the top, Economic Times award-winning banks. But unfortunately, this tech investment in banks are really working. Like one of my friends was telling me that, you take a bullock cart and then take a Lamborghini engine and then tie it around the belly of the bullock, then it will become a car. It doesn't, right? So I'm not that hopeful about this technology investments really paying off because they're very too late, too little, kind of thing. So then you have emergence of fintech and techfin. We'll talk about fintech, but what the fintech companies have done is very interesting, right? So what they've done is really, there is this Chinese torture method in the medieval torture method called Ling Chi. You can look it up, in Google. Ling Chi method is actually killing somebody with thin paper cuts. You take paper and then cut your skin and you start bleeding, right? This is called the death by 1,000 cuts. Okay. Now, what will happen is, the guy starts bleeding and then he doesn't even know he's dying, right? So that's exactly what fintech companies have done to the existing banks because, there are fintech companies that specialize in, SME loans, then others specialize in payments, and then there are other people who are taking away your transaction banking business completely, right? And so on. So all these fintech companies specialize in one area, attacking one product, and then banks are really finding it extremely difficult to live. And okay, we talk about partnerships. Now, unfortunately, these partnerships are also not really working because many banks are quite, arrogant, if I can use the word. And then, fintech partnerships have not really done very well, except in very few cases. So I think, banks are losing out on this. I'm sure there'll be a lot of pushback for this idea, but to add to the confusion, there are tech-fin companies like Amazon, for example, is trying to become a bank, without really becoming a bank, right? So they have all the data. For example, if you're a seller on Amazon, okay, now Amazon has complete visibility over your, sales, right? So it's much easier for you to get a loan from Amazon than from a bank because, and then the collection problem does not exist, right? So there is a question whether loans and insurance, etc., will remain as products themselves. Because if I buy a product and then nothing prevents that product company or e-commerce platform to give me a loan in a matter of seconds. So why should I go to a bank to take it, right? So the loan product gets infused to the main product, and then it just becomes a augmented product, right? So when that happens, so there are Amazon has the brand, they have the money, they have the people, they have the technology. So I think TechFin is going to be a huge competition to the existing, right? Same thing with insurance. I'm buying a car. And then, the car company can give me insurance together, right? And the loan together. So why would I really go to the bank, right? So that's the question. Okay, now, emergence of decentralized finance is the scariest part here. So blockchain technology has emerged. And then, the first instance of that is the cryptocurrency, Bitcoin, which was formed, which got created in response to the 2008 financial crisis. And Satoshi Nakamoto, whose identity is not known, and so he's created Bitcoin, and then the world has changed so much after that. Regulators are trying to figure out ways to control this, and failing completely. Now, decentralized finance has also spawned layer 2. For example, Ethereum is the layer 1 technology. We've not heard of the technology per se, but then I just want to tell you that the need for a centralized intermediary who takes a huge part of commission, the multiple intermediaries, and then they cost delays and high transaction costs, eliminated by blockchain technology, which is also called the the truth machine. For example, you don't really need any trusted third party. The technology replaces that. It's called a trustless system because you don't really need to trust anyone, right? So I gave you the example of this LC between me and my Chinese buyer. Now, if I can put this entire transaction on a blockchain, the buyer will just put on an escrow account in a smart contract the money. Then on delivery, I get paid instantly without having to go through this hassle of paying commissions to so many intermediaries, right? Now, loans are possible today. Real world assets can be collateralized using tokenization methods. There are a lot of saving schemes, etc. available, but it's too early days. But then this is going to spell the doom for existing players. So that's something which okay, TechFin we talked about. So these are the 4 things we have spent on. So I just want to spend a couple of minutes on each of these areas so that we can open them up for questions. I'm sure there'll be a lot of questions. I talked about bank tech, investment.
Mr. Austin,
yes,
we
sure.
are a little short of time, so I think we also have Mr. Zarekankar who will speak next.
Are we done in 15 minutes? Okay.
Sure. That's fine. Just a few minutes to wrap up. Thanks a lot.
Okay, cool. Yeah. So bank tech, so I talked about, who are the major players in bank tech. We talked about fintech. We talked about, TechFin. We talked about DeFi. And then, of course, the rise of digital banks. Niti Aayog has already submitted its proposal to government. I think that is, going to, make a lot of, changes to the existing banking system, and survival of the banks is going to be. So this is something that Bill Gates said, banking is, but banks are not. Okay. So we'll talk about, see how this is a slide which shows you the unbundling of a bank. How many different players are actually chipping away at the banking system. So that gives you an understanding of that, right? So the next part is wealth tech. So since we are short of time, we're not going to go into the details, but wealth tech is getting transformed because of technology. We already know, algorithmic trading. About 60 to 70% of the world's stock exchanges run on software. So they're not people trading against each other, but the software trading against each other, right? And then you have these robot-based services that are replacing portfolio managers, and then crowdfunding platforms like Indiegogo and Kickstarter, etc. They're giving an alternate with the traditional venture capital companies. Cryptocurrencies, this already. So there is, people. Cryptocurrencies have been, very volatile, but then, in spite of that, they're good stores of value. CBDCs is a response by central bankers to offer a digital alternative. But the problem with CBDC could be a lot of surveillance, and then everything you do is known to the central bank, and then there's a lot of privacy concerns and things like that. Then we talk about non-fungible tokens, which are big rage now, especially with the advent of the metaverse. NFTs are going to play a central role. So InsurTech, again, I told you, how claim analytics can be automated, claim prevention can be done using technology and fraud prevention, etc. So the InsurTech. And RegTech we talked about, as even, Shivasan said, banking is probably the most regulated industry in the world. Regulatory compliance is a huge part of the total cost. So I think, once we move to the DeFi world, the need for so much of supervision becomes less and less. And then, regulators are also, using now RegTech. There are a lot of RegTech companies that come up. I think, that's something that is a huge challenge. And then, we need to understand this. And I think, we won't look at the examples, etc. But the central point I'm trying to make is, banks are investing in technology, but that's not enough. Banks are trying to partner with fintech companies. That doesn't seem to be working very well. Then fintech companies are getting funded by venture capital companies a lot, and then they're chipping away at the banks and investment companies. And then the emergence of cryptocurrencies and then decentralized finance is threatening the very core of this industry. So I think that TechFin has a very good, a chance of, winning in this banking system, but they're still centralized. So the future is going to be dominated. So in the short run, I think, the winners are going to be TechFin companies, and the long run, the winners are going to be probably DeFi companies, right? So I think that's what I wanted to convey, and thank you so much.
Yeah, thanks, Mr. Austin. That was a really comprehensive overview of all the different aspects of the fintech industry. So Mr. Zaregaonkar, I think we have about half an hour left. So if you could present in about 15 minutes, I think we should have about 10-15 minutes for Q&A after that. So over to you, Mr. Zaregaonkar.
Thank you, Natsuma, and a very warm welcome to all the participants, and thank you very much to my fellow panelists. I think a lot has been said so far, so it leaves me with very little to add. I think Austin had a very comprehensive deck, so he's already stolen some of my ideas. So I'll try to give some more perspective. I will, as I was listening to the talks, I thought I should share a slightly different dimension to the fintech industry. I would, sort of touch upon what the sort of trends we are seeing in terms of the growth pattern, the sizes, and what sort of opportunities exist. Because I'm sure some of the participants would already be participating in this industry, and they would be looking forward to creating some of the new unicorns, right? So let me try and touch some of those aspects. Naseema, just let me know if my slide is visible. Is it visible?
It's visible. Please go ahead.
Fabulous, thank you. So I think we've sort of anyway spoken about how the fintech industry has witnessed significant growth in the past 5 years. Especially in the last 2 years, we have really seen an accelerated growth, and this is largely driven by the fact that there is an availability of the digital stack from the perspective of Aadhaar, or for that matter, even account aggregators, as we will see shortly. The government initiatives, the Jan Dhan accounts, and also a large population which has access to mobile and internet. More than 55% of the population today has access to mobile and internet. We've seen that over the last 4 or 5 years, since 2016 more so, there are more than 1,000 fintechs that have been well funded. Right, the funding has gone more than $20 billion, and a significant part of that has only come in the last 2 years. So if you look at this is a September report that we published, and you can see that more than 8 billion has come in the last 2 years. Back in September, October, we were looking at 16 unicorns in fintech space. Today there are more than 19, and there are a lot more that are coming. If you also look at the trend, most of the unicorns are in the payment and lending space, which is followed by insurance and wealth management, and that's the area where we'll see a lot more happening, because there's a lot of retail population that is now looking at digital platforms to sort of invest in, and that's where you've seen the likes of Zerodha and Grow really take it on in a big way. I still think that there is huge potential in the Indian fintech industry. If you just sort of look at some of the statistics, in the last 4 or 5 years, you've seen 16 unicorns in the fintech space, but globally we've seen more than 187. So the comparison is is really skewed. And if you look at India, we are only behind US and China in terms of the growth that we are seeing in fintechs. Also, the sort of number of years that it's taken for organizations to become unicorns in India is about close to 8 years. Globally, it is about 4.5. So there's definitely more acceleration that can happen within the Indian space. We see a lot of companies which are already on the path of becoming unicorns very, very soon. So the statistics and the growth numbers suggest that there's going to be a very, very vibrant space, a space that we can look forward to over the next 2 to 3 years, definitely in the areas of lending, payment, insurtech, wealth management, RegTech. We've already discussed some of those aspects in this conversation. What I also wanted to bring in was a slightly different perspective. We've seen that fintechs they start operating in specific spaces like payments, wallets, digital, insurtech, wealth tech, but that is slowly changing. Austin did mention about different areas of fintech operations and how the scaling will happen. if you look at the table towards the right, we see that a lot of the incumbent fintechs are now expanding outside of their domain. So what started as a payments company is now also tied up with e-commerce. It's tied up with investing, insurance distribution, merchant lending, payment gateway, and this is going to only increase because as you look at the economy, it is not only finance. The other areas are also witnessing a lot of traction in terms of the startup ecosystem participating in, and that will create a ripe environment for the fintechs and the other startups to also collaborate, and you will see that fintechs now start expanding outside of their core domain. This is something that will also create new opportunities for fintechs to flourish, and more sort of unicorns coming our way in the next year or so. If we talk about some of the growth drivers that have really helped improve the situation, one is the macro driven. Look at the government regulation and the government initiatives that have helped really to support the startup or the fintech programs. The Dhan Jan Yojana, the Startup India, the license for the payment banks, Digital India program, or even the creation of sandboxes by IRDA and RBI. All of this is going towards ensuring that the government is doing enough for innovation to happen, creating a digital economy, and that's not going to change. The public infrastructure also is being very, very supportive. The Aadhaar and the India Stack, the UPI, the account aggregation, the OSIN framework. This all has been helping the Indian fintech to create innovative products that are now embedded into the banks. So while Austin did mention that the collaboration has not been as smooth, or there have been frictions, while all of that is true, I think moving into the future, the banks will look at collaborating more with the fintechs, because the fintechs are the ones who are able to use this infrastructure better. Also, the demographic opportunity itself. We spoke about the fact that there are a lot of mobile content that is getting consumed in tier 2, tier 3, and tier 4 cities. Which is something that will not only help create infrastructure or a economy that consumes digital content, but will also transact on that digital platform. The second growth driver is really the tech advancements. We spoke a lot about the smartphones, but a lot of ideas that came on this panel discussion were also hinting towards how we use AI and ML. But beyond AI, ML, or metaverse, I think the basic availability of data is going to really create a big dent, because today, for most of the people, availability of digital data itself is enough to start creating innovation. We really don't need to get to the blockchain era to have digital adoption happen at grassroots level. A lot of the lending that we are looking at, the buy now pay later, or looking at priority sector lending, or looking at MSME sector lending, it is all really taking off because of the availability of basic digital data to do digital KYC, to digital underwriting. These are basic stuffs, and I still feel, as a practitioner, we've seen that there is still a lot more that is going to happen in this space. And Harshit did mention about how he's working with Perfius. Perfius is doing a lot of work in this area, and I'm sure you can give some examples as well, Harshit, as we progress forward. There's a lot of collaboration between banks and fintechs, and we are sort of looking at banks which are running fintech incubation. So if any of you is keen to work or participate in these programs, there are a lot of fintech incubations that have been driven both by public sector and private sector banks. Reach out to them. The processes are very, very simple. There are a lot of open APIs that the banks are now publishing. Banking as a service is becoming popular as well, to embed finance into third-party products. So you'll see a lot more innovation coming here. There's a strong technology talent pool, and we've seen a lot of the fintechs that come to the banks are coming from tier 2, tier 3 cities. They're not coming from Mumbai, Gurgaon, or Bangalore, while that's been the historical trend. We've seen a lot of innovative work happening from cities like Jaipur, Kanpur. We've also seen a lot of work happening from Nasik, Nagpur. So we've seen people come from these areas with innovative ideas, and they really have something that is ready to sort of integrate into the banking ecosystem. So a lot of this will also help create a strong fintech economy. The last is the consumer driven. I did touch upon this, that there's a huge amount of digital consumption that is happening even at the village level. The sheer use of technology by these folks will definitely improve digital consumption. It will improve digital transactions, and this is just a beginning. What we've seen so far, the sheer rise in number of UPI transactions, the sheer rise in the number of demat accounts that have been opened, all tells us that the the consumer is now ready to adopt digital and start transacting using digital technologies, and that's not going to go away. Also, one of the reasons why the Indian fintechs are preferred globally is because we are very value sensitive. We are very frugal in our innovation, and that I believe is again an advantage that we have. And some of the solutions that we've developed here, we are taking them abroad. In fact, the NPCI proposition around payments is something that all the other countries are wanting to follow. They've been coming to India to see how they could adopt such a digital payment infrastructure. So all of the innovation that has been happening in the last 5 to 6 years is something that the world is taking a note of, and we will see a lot of participation from global players also. I have personally been part of some government programs where they're trying to create an exchange program between Europe and India, where we're able to exchange ideas and bring fintechs from Europe to India, and likewise give fintechs in India an opportunity to operate in other geographies. Without taking more time, I think this is some of the issues that I believe everybody's touched upon. What are some of the challenges, though, that fintechs are facing while everything else looks good? There are still some basic issues that we are dealing with, like security. There are data leaks. There are still trust issues when using digital transaction medium, which really need to change. There is a very adoption. For example, not all the sectors operate the same way. Not all sectors have a digital data. For example, the current account as versus a saving account have to be treated very, very differently. So all of that is changing, but we still have a sort of a variety in terms of the consumers that we serve. There's rapidly changing regulation. For example, peer-to-peer lending was very, very popular 3-4 years ago in China. It really never took off in India. There's a lot of uncertainty around how this will pan out. We are seeing the same when it comes to cryptocurrencies. The rapidly changing regulation also is sort of hurting the sentiment, and I think some work needs to be done here, especially by the government. The last is the lack of awareness. This, I think, has changed much, but still the basic understanding of financial literacy is very, very important. So when we talk about insurtech, when we talk about wealth tech, unless people really understand how these products support the lifestyle of a customer, not much of adoption will happen. The financial literacy is going to play an important and a critical role in how some of the fintechs survive and sustain. The last piece that I wanted to quickly cover was around the topic, which is how the banks are collaborating with fintechs. We've seen the banks not only collaborate with technology in the past. I mean, typically the IBMs of the world were the favorites of banks, because there's a saying that nobody got fired for buying from IBM, but we've seen that changing now. Along with the big techs, the banks are now working very, very closely with fintechs to create innovative digital models. They are building digital platforms. When we talk about fintechs are now, rather than focusing on everything, they are now creating a platform that can create an engaging sort of an experience for a particular customer set, because of the variety of customer profile that we're dealing with. Technology, again, innovative solutions that we've seen across, for example, AI, ML, metaverse. These are all creating new product lines that never existed in the past. So we'll see that the collaboration with fintech and technology is going to help us create a new set of product proposition that never existed for our customers. And there are ways that banks are doing this. I just wanted to highlight a quick sort of illustration of the concept. If you look at the financial institutions, they are really coming out with the problem statement, and they're looking at fintechs who come out with some innovative solution. The data and the platform is again something that is already available within the bank, or it is available with the likes of the big techs. The first stage is really the matchmaking, and this is where the incubation hubs that the banks have created come into play. The hubs actually help create a matchmaking. Then there are pitch days. The fintechs that pass a particular criteria are invited to pitch their ideas to solve that particular problem statement. The bank helps them with sandboxes, with test data to showcase and prove the concept. Once the concept is proved, there's a demo day, and what then you do is get the product sort of integrated into the bank's platform. If you see, there are a lot of banks that are running these programs. As I said, there's a Mumbai FinTech Hub that runs this program all along. There is FCO, which is the UK government's initiative to run fintech incubation. Visa runs a fintech incubation. Citibank, QDB, American Express, they all are seeing a lot of participation from the Indian fintech industry. So there's a large potential for any of the participants, if they are keen or they are already working towards an idea, to look at some of these incubation hubs and see if you could participate and leverage the strength of the banks. So that's about it. If we can take any questions, and that's enough.
So thanks, Mr. Zaregaonkar. Especially the last part about the incubation journey was very interesting, and also the earlier discussion about the role of unicorns and soonicorns, which have obviously been in the news recently as well. So that's definitely an important part of the fintech sector. So we have about 10 minutes or so for Q&A. I think some questions have already been put up, and I think some of you have already responded to them. But maybe you could expand on some of the questions that have been asked. So, for example, there is a question on the future of fintech companies in assisting Nbfcs which have access to people who are missed out by traditional banks, for example, in rural India. So, would any of you like to talk about that? What is the potential of fintech specifically in that space? In terms of sort of working with Nbfcs maybe in rural areas, is that a valid way for fintechs to sort of penetrate rural India?
I think I'll take that question. I'll attempt to answer it in a way. I think when it comes to rural India, not only the Nbfcs, but a lot of public sector banks also are playing a huge role in reaching out to the rural India. And there are two sorts of customer segments that they're looking after. It's the retail population, and also the the farming or the agri part of it. You'll see, if you just Google, you'll find a lot of traction on the agri loans. Specifically, a lot of startups are also playing in this area. I think NBFC is not the only medium. There's definitely a lot that the banks are also doing, and it's part of the agenda of the bank for achieving financial inclusion, which has been also promoted by the regulator and not just by the banks themselves. I hope that answers the question.
Mr. Jain, do you have something to say?
Yeah, I in fact just wanted to add on over here that I think at the time of the pandemic, the focus on the rural sector, as well as the farm to the table type of supply chain actually came into the fore. So I was in an early organization where financial inclusion was really seen to be the big thing, and we saw particularly the governments in Haryana. They had taken the lead in terms of trying to go ahead and eliminate, the use of cash and so on and so forth. So I think there's a lot of emphasis that the government is also doing to promote, the digitization and so on. Definitely, I think some of the NBFCs who are looking at what I had talked earlier about the fortune at the bottom of the pyramid sort of approach, they are finding the benefits of that approach as well. So yes, I think the pandemic has sort of also helped in terms of bringing this into focus.
Okay. There's also a question about cryptocurrencies. So we all know that crypto does not have a regulatory authority, does have the power to substitute for the conventional currency in the near future. Would any of you like to take it, Mr. Austin?
Yeah. Okay. Now, it does not have a regulatory authority. It is the case with even a lot of other developed countries. For example, regulators are scratching their head because the technology is moving so fast, right? Now, there's a lot of misunderstanding about cryptocurrencies. Now, many of these crypto tokens are not necessarily currencies. They're just tokens, right? So, for example, the CFTC thinks that in the US, for example, and even the SEC in the US, they think that Bitcoin and Ethereum are actually commodities. So they would be, regulated by CFTC and not SEC, right? But there are other tokens like Sol token or the meme coins that we are all familiar, like, Shiba and Doge. Now, there's a lot of confusion, but, we need to not treat all crypto tokens as cryptocurrency. So the question is, will it substitute the conventional currency? Now, it depends on which particular token we are talking about. Okay. So conventional currency or the fiat currency, as we know, there are two functions. One is a medium of exchange, right? The other one is a store of value. For example, Bitcoin is considered as digital gold. And then it is very difficult because the price fluctuates so much because of the total market capitalization is low, right? So it is very difficult for us to use that as a medium of exchange. So people would rather buy and hold, right? Or hodl, as we call it, right? So that is the store of value. So we need to figure out, which of these crypto tokens will serve as, replacement for conventional currency. For example, I just want to give you one example, international example. El Salvador has made Bitcoin a legal tender. Why they did this is because a lot of El Salvadorians, live outside of El Salvador, and then they keep sending remittances inside El Salvador. Okay. Now, El Salvador doesn't have its own currency right now. It's a dollarized economy. So they use dollars. Now, if a non-resident El Salvadorian sends money, he has to spend about 15%, in terms of transfer charges. Now, if he uses Bitcoin, it will be few cents. So it has worked extremely well for El Salvador. Of course, the traditional banking system and the World Bank, the IMF, everybody's warning El Salvador, but then El Salvador seem to be going ahead and doing this anyway, right? So it depends on your situation. For example, India, in my opinion, for example, there are so many Indians sending. India is one of the largest remittances receiving country in the world, actually. If I can use one of these cryptocurrencies to transfer money, it will save us so much of hassle and then transaction time and things like that. But then it is extremely politically sensitive kind of decision to make. So I think that in the short term, I don't think our currency is going to be replaced, but US dollar might get affected a lot because of this, one, because of the rise of cryptocurrencies as payment mechanisms, two, because China and other players are developing their own CBDCs. So that will bring down, the status of dollar. So I think, the US has to worry more about this than India right now. But I think India has taken the view that these cryptocurrencies are actually digital assets, and then SEBI will probably, regulate it. But that's a good start, having no regulation at all.
Okay. And what do you think, for any of you, what do you think should be the appropriate regulation of cryptocurrencies in India by the RBI and other regulators? There's a lot of controversy about that right now. What do you think would be the appropriate level of regulation?
Yeah, so maybe is something which I'll try and answer. I think Austin has also put up, cryptocurrency is a very complicated concept. I don't think RBI wants to get into the space of trying to prescribe regulations around it, and quite likely that cryptocurrencies may be considered more like an asset or a digital asset rather than a medium of exchange like a fiat currency. It will continue to have significant amount of challenges and issues because you must understand the amount of transaction flows that happens through fiat currencies are significantly high, whereas cryptocurrency, just the computing power is just significant. I mean, the just cost of transferring will be very high. More importantly, cryptocurrency promises significant amount of anonymity, which is not something which central banks like fundamentally, because when we do financial transaction exchanges, cryptocurrency is more a very lot more anonymous. So it can create significant challenges and issues from that perspective. Lastly, at the end of the day, any currency valuation has to be backed by, I mean, and this is perhaps a very traditional, as a banker from a very traditional perspective, a currency needs to be always backed by certain sovereign and certain some assets standing behind it, and cryptocurrency therefore seems to be more like an asset. I mean, no different than pardon my this one, no different than like a lottery, which can go up and down. So that's how I look at it. I mean, it's not, I mean, but I'm a lot more enthusiastic about blockchain, but we're a lot more pessimistic about crypto. So I would think that RBI will wait and watch and see how globally people look at it rather than rush into a regulation.
Okay, Mr. Jain.
Thanks. My view is that this has to be a well coordinated effort that is there. Otherwise, global arbitrage opportunities, particularly in areas about money transfer, is totally avoidable. In my view, the second is the point that Shivasan made is right in terms of the mining and all is hugely consuming power and so on and so forth, which is against what we are trying to do from an ESG perspective, and also the fact that yes, it seems to be a popular sort of a currency in the dark web, but we have seen how the governments have gone ahead to print money as if it's an unlimited supply. So from that point of view, I feel at least Bitcoin, there's a limited number that is there. So when you say backing of something that was there in the Bretton Woods conference about gold, the central banks have not really gone ahead and paid much heed to what are the type of quantitative easing they have done in the aftermath of the global financial crisis. So I feel the response of the central banks needs to be well coordinated. Definitely maybe an asset or so on, but underlying technology that is there about the distributed ledger technology is something which I think what Austin talked about earlier, I'm a big fan of that, because sometimes, with under the guise of cryptocurrency, I think the work that is being done in the underlying technology also gets shadowed. That is avoidable in my view.
Okay, Mr. Austin, you had something to say?
Yeah. In fact, I just want to take a minute. See, the panelists talked about, Shiv, and I said, anonymity. Actually, to tell you the truth, today I can show you the blockchain, Bitcoin blockchain and Ethereum blockchain, and you have all the transaction listed there. Okay, so there is complete transparency. People think that crypto means like something secret and hence it is anonymous. No, there are a few coins. For example, just like you have Swiss bank accounts which are not really shown to everybody. There are special coins like Zcash and Monero, etc., which are for secret purpose, and it's being again used by government agencies, etc. Right? So this assumption that the cryptocurrencies are anonymous is actually not true. One. Second thing, the government has the medium of exchange, Indian rupee or dollar, does not have any bank, backing at all. There are no reserves. It's like, for example, you take a rupee note, I owe you 500 rupees. This is what the RBI governor signed. If I take it to the RBI governor and ask him, give me some gold instead of this 500 rupees, he's not going to give you. He's going to give you another 500 rupees, which also says this is a promissory note, right? Or give you 200, 200, right? So which essentially means that, the value of this currency, is something that we mutually agree to be. There are no, after the Bretton Woods system, etc., after Nixon removed that gold standard, banks don't have any reserves at all. So that's why they keep printing money, etc. So this is a myth that, the government money has backing. It doesn't have backing. One, cryptocurrencies are, another constant complaint is about the environment. Okay. Now, textile mills are causing, a lot of problems for the environment. So let's close the textile mills. The banks are using up so much of electricity. So let's close. No, I think, Bitcoin money is interesting, and only Bitcoin and Ethereum right now are using, this, but then Ethereum is moving towards a proof of stake model. So, and a lot of other places, actually, there are arguments that how Bitcoin and money can actually balance the power grid and things like that. It's too complicated, for a small. So I think that is, that argument is also flawed. the third thing is, fraud and, for example, before 2008, there were no frauds, there was no counter-terrorism financing, there is no, they were all there actually. So this idea that, dark web uses only the, cryptocurrency, etc., is actually not true because, this number of frauds we highlighted, ransomware, etc., is highlighted so much, but every week a bank gets hacked. Major bank is hacked every week. You don't believe me, you can just check it out. 90% of the bank frauds are committed, by whom? Bank employees. There is enough proof that, without the connivance of the bank employees, bank frauds are difficult to get. So this is again proof. So I think that, crypto has become everybody's bashing point, but it's actually not true because they've never spent the time to go and look at the blockchain and let's see it. So I think we don't have, so there's only education, because I was watching, interviews on CNBC, etc. Now the people who are asking questions, doesn't know what she's talking about, and then even the RBI governor and the former RBI governor, who have a lot of respect for, also they were not able to, really understand the technology behind this. So I think that will change over a period of time, right?
So thanks. So I think we are out of time. Mr. Kumar, if you could make your final point very quickly, and then we'll conclude.
Yeah, I just wanted to kind of clarify when I meant backing doesn't mean gold. It doesn't imply that, but what it means is who is printing the currency. It's very different. Let's say Zimbabwean government printing a currency vis-a-vis US government printing a currency.
I think
that's absolutely true.
Yeah, so it really, I mean, say for example, let's say Zimbabwean government promising $100 million vis-a-vis a US government promising $100 million are two different constructs, and I think that's where somewhere in like a cryptocurrency there is definitely an owner behind it. All it does is a medium of exchange. So I think therein where lies a critical difference, and as you said, in quantitative easing, what has really implied is how the macros and inflation, because if they are not impacted, then the government can actually print currencies to stack up and ensure that there is no inflation. Now, that's the limited points with respect to how the currency vis-a-vis this one operates.
Thanks. So I think this is a good time to end what was a fascinating discussion. I'd like to thank each of our 4 panelists. I think all of you brought sort of different perspectives, but there were common themes that emerged. And I think the overall message is that fintech is pervasive. It's going to affect every single aspect of the financial sector. And pretty much every stakeholder in the financial system, the fintech companies, the banks, the traditional banks, the Nbfcs, the regulators, and we as consumers have to sort of adapt to this new world. Hopefully at the end of it, there'll be what's central would be the creation of value and more efficient and cheaper and more intelligent services. Thanks to all of you. So before we end, could you please turn on your videos? We just like to take a group photo. Mr. Jain, could you please turn on your video if we just...
I don't know, it doesn't seem to be
okay.
working. Sorry.
That's fine. Oh, okay. I think that should be fine. So thanks again to each one of you. And that concludes the session on the future of money. Thank you.
Thank you very much. Thank you.